Welcome to BizTech's Asian Midday Market Watch. Our guest today is Phan Vee Leung, founder of the and CIO of Track Record Asia. Now, welcome to the show, V.
Hey, hi, Brian. It's good to see you.
Now, good to see you too, V. Now, before we get your insights, let's take a look and see how markets have been performing across the region. We start, however, with cryptocurrencies. Bitcoin is at 19,449.2. It's down 0.73%. Ethereum is at 1,329.98. It's down 0.9%. Now, looking across to regional stock markets, we've got the SGX, which is down 0.42%. KLSC is down, in fact, it's up now 0.01%. Shanghai is down 0.29%. The ASX All Ordinaries is down 1.19%. The Nikkei is down 2.3%. The Hang Seng is down 0.21%. And rounding up the numbers, we've got the Kospi, which is down 0.27%. So it's a sea of green, the sea of red across the region. Tell us why, V.
Well, today is just tracking the poor performance of the U.S. stock markets yesterday. But generally, on the longer time span than day to day, markets are weak because the U.S. Federal Reserve has been very aggressive in their statements about wanting to control inflation. That's a top priority now. So that continues to weigh on market sentiment. And of late, that worries was even worsened by the situation in the UK, where the new UK government introduced a profligate budget where it had a huge tax cuts for which predominantly favors the higher income group. So that worsened the market sentiment because it's going to increase borrowing for the UK government. It's going to increase yields across the board. So that's the situation we have now.
Now, V, I want to dial in first on the turmoil in the UK. What does this mean for the pound and for the UK economy as a whole? Because it seems to be a game of Russian roulette going on right now.
Yes. So it's a situation where the central bank is hiking interest rates because inflation is high. Because the root of the problem is inflation is high, and because they're hiking interest rates, and because of the extended war in Ukraine, energy prices is high. The cost to the UK consumers is very high for the energy bills. Economy is slowing down. So the new government decides then to boost the economy by spending, by increasing the budget deficit, like tax cuts and everything. But that goes against what the central bank is trying to do, because that tax cuts package is going to be highly inflationary, and it's going to increase the borrowing by 45 billion pounds, I believe, and that's going to be it's going to be very bad. It was very bad for market sentiment because it's behaving almost like an emerging market economy, where in a high inflationary environment, you're supposed to put on austerity measures. If you want to boost the economy, you should make it very targeted, not across the board, right, to people that do not really require it. So the response by the market was that is basically how they would have punished emerging market countries from years ago, where they sold the currency, they sold the bonds, they sold the stocks, everything was sold, right? And we had a very interesting development where the IMF criticized that tax cuts almost immediately after it was announced, right? It's within a very short time, and typically that doesn't happen for developed countries with a developed market, with a transparent market. So that is a sign that the package was very badly received by the markets, by investors. But for now, the panic selling has been stemmed by the Bank of England's massive intervention in the bond markets. They're buying bonds to support the bond market, but that's again is running against what they're intending to do which is hiking interest rate, tightening liquidity conditions. So by buying unlimited amount of bonds, they are increasing the money printing of the sterling pounds, and that's really bearish for the currency over the long term.
So then, what's your view on the UK economy, particularly then from a lens of an Asian investor? How should I be putting my money to take advantage, perhaps, of these opportunities?
Well, I think the UK is if you take away the name UK, if I tell you a country where they have 3 prime ministers within 4 years, they have repeated cabinet scandals, politicians that are not doing what they're supposed to do, they're breaking their own rules, they're spending a lot of money in spite of the debt situation they're in, and the Bank of England is the central bank is raising interest rates while buying bonds unlimited amount, but while printing money, and they have almost a double-digit inflation. You would say is a very bad
Emerging
situation for the
market.
country. You sell everything in the country, and I guess that's exactly what you should be doing, right? I think the UK is now in a very, very bad situation. It is still it's still suffering the aftermath of Brexit, which we've been talking about for years, right? And they still have the very unresolved war in Ukraine, which is going to increase their energy bills for the consumers. They have a lot of problems, right? Pension funds start suffering margin calls because the bond markets were crashing. Uh, Energy providers suffering margin calls because their hedging of the energy supply was losing money. So there's a lot of bad things going on for the UK, and I don't think there's going to be any resolution to that unless the government gets its act together. But for now, they continue to persist with wanting to spend that amount of money on tax cuts. So I think for now, although the market has stabilized, as inflation remains strong, remains high, the economy continues to weaken. Then the Bank of England, the central bank, will be faced with a dilemma of whether they should be hiking rates or they should be buying bonds, right? So I think it's between a hard place and a rock. So I think it looks bleak. If you want to make money, I guess you have to short it, right? If you
So
take
shorting it
away,
is the way to go. That short the pound, short the
yeah, I think
UK
short
as
the
a
pound,
whole.
yeah.
Now, V, thank you very much for your insights, and thank you very much for coming on the show.
Thank you very much for having me. Thanks.
Now, we've been speaking to Phan Vee Leung, the founder and CIO of Track Record Asia, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. It'll also be on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.